What's up, guys? Welcome into the 2026 B&B Tax Seminar and Q&A. First time we've done this, but the amount of people that have questions on taxes and reselling, me and Recon from the Discord are going to drop some knowledge, some things that have worked for us. First, though, we should clarify, I got to say this as a legal disclaimer, and I'm going to put it in the YouTube description too for anyone that's not in here live. B&B and its hosts are not tax professionals, CPAs, or licensed financial advisors. Nothing discussed during this seminar should be considered tax, legal, or financial advice. Individual tax situations vary, and we strongly recommend consulting with a qualified CPA or licensed tax professional for advice specific to your circumstances. We're going to say that a million times in this video is that you should have a CPA, especially with your scaling business. They'll save you way more money than you're worth, than you're going to pay them. But we're going to just drop some knowledge here on everything you need to know about taxes and what you need to know about that. So I'm looking at the chat here. You can use the chat. One sec. You can use the chat here. I took a screenshot ahead of time. Let me make myself big real quick. That little chat button right there, and you can chat. We will have time for questions at the end. But until then, we are going to present a couple things that have worked well for us. All right, so the things we're going to be talking about: 1099s, cash versus accrual, accounting, bookkeeping, and Q&A. Also, to answer the first question, how long is this session? Probably going to be like a 10-minute presentation, and then however many questions. And yeah, it's going to be recorded and thrown up on YouTube later. Also, I got Recon here with me. I think I already introduced him, but he's here. His dad is a CPA, and he's been doing his own taxes for a while. So again, we're not tax professionals, but we're just going to do our best to tell you guys how we run our taxes for our reselling businesses. First of all, 1099, to know what that is. Basically, the government, it's the form you're going to get from eBay that they reported to the government, and that's if you did over $20,000. It was $5,000 last year. Trump raised it to $20,000. So you're not going to get that unless you do over $20,000. And we've gotten asked this a couple of times in the Discord. Should I claim it if I didn't do under 20,000? That's completely up to you. You are supposed to, but we're not going to tell you either way. All right, next, you got anything to say on the 1099s, Recon?
No, they'll just send you 20,000, 100 plus transactions.
Yep.
If you got one, do it. It's not that bad.
Yeah, definitely do it if you get the 1099, or you're going to get the IRS knocking at your door.
Yeah, don't have the IRS knocking at it. But yeah, they'll send you one for eBay, one for Amazon, one for any other platforms that does it. It's each platform. It's not combined. Every single platform will do it. So if you've only done 5,000 on one, 5,000 on another, 10,000 on another one, you technically don't have to, but it's technically you're supposed to.
Mm-hmm.
So do what you want with that, but always consult with a tax professional or CPA.
Yep.
About that. So.
Yep. And then next, this is what gets people very confused, where they're like, do I write off my costs of goods before or if I haven't sold it, or after I sell it? And that depends how you do it. Again, consult with a CPA on which one of these will be best for your business. Accrual accounting, basically you recognize the revenue once it's earned, aka the product or service was delivered. Expenses are recognized once billed, meaning the customer invoice was received, and taxes are paid on accrual earnings even if not yet received in cash. And then cash accounting, revenue recognized after payment and cash has been received. Expenses are recognized after cash has been spent and no longer in the company's possession, and taxes are only paid on earnings received in cash. Basically, cash accounting is money in, money out. So if you buy inventory, you are deducting that inventory. It's basically like a yearly thing. Whereas accrual, you're not deducting that inventory until after it's sold. So in cash, your cost of goods is basically at the time you bought it. At accrual, it's at the time that's sold. Then you can deduct that cost of goods, if that makes sense. And the way that I've always thought it made sense because different types of businesses and the different stages you're at in your business can be when you want to use each of these to spend less in taxes. If you are scaling and you're dumping a lot of money into inventory, cash is going to be the one you want to do, because the more money you're dumping into inventory, you can write that off immediately. However, if your business is scaled completely, and you're not buying as much inventory and you're making more sales, accrual will make more sense because you're selling that older inventory from past years, and then you can write that off as a cost of goods sold. So again, a CPA will be able to help you with all of this. I don't know if Recon has anything else he wants to add to that. They can be
Yeah, I
kind of
do.
confusing. Yeah,
Actually,
go for it.
but yeah, like basically, it's most likely the cash base is the most incentive way of doing it when you're starting out. It really only depends on if you're going to continue to scale up or if you're not going to continue to scale up. So once you are done scaling up, then you're most likely going to go to the accrual method of accounting. It just makes the most sense for, your tax benefits because you have that older inventory. But once you change from the cash to the accrual, you can't go back from accrual to cash. So once you do that, you can never go back. So my recommendation is stay in cash as long as you possibly can until a CPA says it's the best way of doing it to move to the accrual method.
Mm-hmm.
But I always would stay into the cash because once you hop the fence, you can't hop back over the fence essentially. So that's just the way I would look at doing that. But as I said, a CPA will have the best judgment of when you're good. But most likely, if you're still scaling and they're asking you're still scaling, they'll most likely just say, "Oh, keep using cash," because you don't know. Maybe you want to scale it to 500,000 in sales a year, but you're only at 250,000. But you're technically still taking profit out of the business. It still might be you're still technically scaling up. So most likely, cash method will be the best way of writing off inventory.
Well put. I actually didn't know you couldn't switch back, so that's really good. I've done accrual for a couple years now. And then how to bookkeep. This is also going to depend business to business. Even me and Recon do a little different. The way I would recommend starting is going item by item in a spreadsheet. And a lot of people like to put in the shipping, the fees, all that stuff in there. You don't really need to do that, especially like we're talking mainly eBay. eBay, you can pull all those numbers directly from your seller hub. You just go into, where is it? Let me find it real quick. It's under performance sales. And then you can literally look at last year and see everything you spent in shipping labels. If you use Pirate Ship, you can pull those numbers from Pirate Ship, and then you can see your fees directly on eBay in that sales tab as well. So a lot of people, I think, like to track that item by item just to see exactly how much profit they're making, which is good, but you don't necessarily need to do that for fees and shipping because you can pull those directly from the platform. However, you should be doing it for item and your cost of goods. So that you can track that. So that's how I recommend starting costs of goods, item by item in Excel or like QuickBooks. Once you're over probably like 10 sales a day, that can become tiresome and take too much time. So when I actually started making more than that, I actually asked my CPA if there was any bit of a little better way, and I have it written out just because it is kind of confusing. So like I said, most people go item by item in QuickBooks or on an Excel spreadsheet. I used to do this, but it would take me forever. So my CPA found a better way for me. Now at the beginning of every single year, I print off all my eBay stores. Actually, this year I just downloaded them. That way I could go through them in an Excel spreadsheet. And at the beginning of each year, I basically go item by item, how much I paid for each item. I get a total. That's my beginning inventory. So I have a beginning inventory from last year and a beginning inventory from this year. And with that, plus all of my purchases, which I have several business credit cards that I only purchase inventory on. So I can pull those numbers very easily because I only purchase inventory on those. So I got 4 or 5 credit cards that I can pull my inventory purchases from. And then from that, with this formula, beginning inventory plus purchases minus ending inventory equals my cost of goods sold. So with that, I'm able to pull my cost of goods sold. It does stink for like a month. It takes me like 3 to 4 weeks to inventory my entire stores completely, but that was way better than tracking sale by sale. And there's many ways to do it. I know Recon does something a little different. Everyone's just got to kind of find what works for them and talk with a CPA about your business, and how many sales you're making, what types of stuff you're selling. And if you get a good one, they should be able to help you figure out what can work best for your business.
So I technically I'm more of a lazy person, and I don't like doing everything either quarterly, weekly, daily. I've got other things better going on, and I have to make money. So that's the last thing I want to do, is essentially add up numbers. So what I do is, because technically I'm still on the cash method still. So what I do is basically I gather up. So whenever I get receipts, I bag up all those receipts. This is how I do it. And it's kind of a weird way of doing it, but this is very easy for myself. And it might honestly be easy for you. For anybody who's doing the cash method, I just bag up all my receipts, put them in a bag or put them in a bin, and just keep getting all the receipts. If I buy online purchases, I just print off the receipt from the email or whatever, and keep printing those out. Or even if you forget to, you can print them out after if you remember where you put it. And what I do is I just stack it all up from the year and whatever. And then what I do is I basically just go, vendor by vendor and add up everything. And then that's how I find out how much I've, spent. Because if you're buying so much inventory, adding up those every week or every month is just a daunting and an annoying task. Oh, I forgot to add up my 57 receipts for the month, or 120. Like sometimes one month I probably had 250 receipts. Like that's so many receipts. Honestly, it's easier just to do it once and, rip the Band-Aid off once and just take a day and do it. And honestly, it's not that terrible. But yeah, that's just the way I do it. And I'm still in the cash method doing that way. And I've had no issues, but it really depends if you want to break it out quarterly, if you want to break it out every week or month. It's basically whatever you want to do. I just do it the lazy way and just add up everything after the end of the year. And then that's my inventory. And then I add up I have all my receipts for all my, purchase or business expenses, like shipping labels and fees and all that other stuff, and boxes and other supplies. I just do that at the end, and subscriptions. I just do that all at the end because I already have it all organized somewhat. They're all in bags, but they're there. I just got to go dig through them and add them up. So that's just kind of my way of doing the cash method. You can do the cash method however you want. You want to once you get home, put all those things in. You could do that way. But what I try to do is, unless you're going to return something, if returning something, just make sure you have that refund, because you got to add it back into your not spent, because then your inventory spend is off. So also remember to keep all your, say you return inventory, make sure you have that return thing stapled to the original receipt, just in case the good old IRS comes knocking. And you can explain what happened there. So
yeah, that goes in general. Just like I didn't say I do anything with my receipts, because I don't. I use my credit card statements. But keep all of your receipts, because if I were to ever get audited, I have all my receipts. I literally keep them in boxes labeled each year. I keep them 5 years out, because that's what you're supposed to do. So if anything ever happens, you can just hand it all over to them so they can go through that. So keep all your receipts, no matter how you do it. You should always be on top of that. So that pretty much wraps it up. If anyone has any questions, feel free to drop them in the chat. We will answer any tax related questions. Otherwise, we will hop off. Appreciate people for hopping in here. You have a couple minutes for people to type some questions. Can you think of anything else we left out, Recon?
Not too bad. I just say make your life easy. The easiest way is to get a CPA or a tax accountant. This is no plug to go spend hundreds of dollars on the best CPA out there.
No.
It's just to make your life easier. I've always just done my taxes because I know how to do it. I do my taxes, but it's easier to go to a tax professional or a CPA if you don't know how to do your taxes. Just go pay the money. It'll save you headaches. It'll save you money. It'll save you time. It will save months. Everybody's like, oh, you do your taxes. Well, yeah, I know how to do my taxes, but it's not fun. I just don't want to spend it.
It's a write-off at the end of the day too.
Yeah. Also, it's a write-off.
Which we should probably talk. We should talk about some write-offs, shouldn't we?
Yeah, we could talk about some write-offs.
Now that I say that, yeah, and it's not as much as you would think. Like I used to pay like $200 a year for my CPA until I ended up getting an S corp, and now I have payroll, and now it's like $500 a year. But they save me way more. They save me way more than that. And again, it's a write-off. So if we don't make questions here, we'll talk about write-offs here. I just found a quick image on the internet just for this topic. Basically, a write-off is anything that goes against your business, and you can write it off on your taxes. But again, you'll want a CPA so they know how to and what categories to put this in on your tax return. Some write-offs that come to the top of my head. Obviously, we've talked about some of them already. You've got your shipping labels. You've got your fees. You've got your costs of goods, depending on how you're doing your cash versus accrual, like we already talked about. You've got your supplies. You can write off miles if you were sourcing or going to the post office. Make sure you're tracking that on an app or something like Mile IQ. There's a couple different apps that do that. You can even write off like business lunches if you got lunch on the way back from the post office. There's so many different things like that. If you bought a car over 6,000 pounds, like an SUV or a truck, you can write off a portion of that. There's so many things. Can you think of anything else? I mean, it's so much.
It's endless. Any kind of supplies, like it could be a marker or a ruler or anything that goes against your business. Like, oh, I use that ruler to measure something. Write it off. Oh, I need Post-it notes because I write down notes on it. Write it off. You can literally write off anything that goes against your business that you need to function your business. Like, you need a new computer. You can technically write off a computer technically. Like,
yeah,
there's anything that you need for your business, it can be written off. And I want to also go deeper into the mileage thing. There's actually two different ways of doing mileage. There's the mileage method or the basically car expense way. There's two ways. So essentially the car mileage is basically the government sets a set amount per mile that you can write off. So was it like 65 cents a mile or something like that? So every mile you drive, you can write off 65 cents. So you can do it that way. So whatever, say you drove 6,000 miles, you'd multiply that by 65 cents, and you'd get whatever you can write off for mileage. The other way you could do it is whatever costs incurred while, if you had a car and you had to get, brakes done or oil changes or tires and whatever, that and gas, you can do it that way. But usually if you're driving a lot, the better way of doing it is usually mileage. 9 out of 10 times the CPA will say you use mileage, you'll be making a lot more back on your taxes doing the mileage. But once again, always consult with the CPA. But usually they go with mileage. I've never heard of a CPA that does it the other way, but there's two ways. But
that's good.
Yeah.
Question. I came in late. Maybe you mentioned it already. Spreadsheets, QuickBooks, or other software recommendations for accounting. Yeah, we mentioned it. We're going to post this on YouTube. Go to around like the 9 or 10 minute mark where we were on this slide, how to bookkeep. I think both of us just like use Excel, and we have slightly different ways that we explained how we do it as well. But yeah, you don't need to spend on those softwares because you can literally, like I said, when we did this slide, you can pull the numbers exactly from eBay. The only thing you really have to get yourself and write on those spreadsheets is the cost of goods. You can pull the fees, you can pull the shipping labels, all that stuff. You don't need anything fancy to track all that.
All you got to do is basically do the write-offs and the cost of goods sold. As long as you can add up those two to get together, you're good. And also another write-off is like softwares as well. Like any softwares, like you need Windows 10 or Windows 11 or
bread and butter group.
Technically, bread and butter. That's a write-off.
That's a business expense.
$39 times 12. Bang. There you go. Where I just saved somebody almost $500. There you go. Thank you. Look at me. Please donate. I'm just joking. I don't need your money. But Yeah. So yeah, it's another write-off. But yeah, you can get quick if you really wanted to get QuickBooks. I don't see a thing in QuickBooks unless you're doing some very sophisticated stuff.
I
Like
know
you
there
have
is some.
payrolls or anything like with like
Yeah.
multiple employees, but there's no if you're basically a sole proprietorship and you only have one your sole self is the one employee,
Mhm.
or you're the only person on the payroll if you're an S corp or something like that. There's very little that you need QuickBooks for. Like they're like,
Exactly.
oh, you can scan it on the app for your
Yeah.
receipts, whatever. Just look down at the total with the tax.
Yeah. People
That's
pay
how you
way too much for like accounting softwares and stuff, and it's really not that difficult since most of the stuff gets tracked. If you just know how to track your inventory, like it's not. I mean, both of our methods that we talked about, I think we both knock it out in a couple weeks. Like it's really not that big a deal. You do it, but come tax time, you knock it out, and it's done. So other than that, everything else is tracked. Um, yeah, I use my CPA uses QuickBooks, but that's just for my payroll. I've never logged in. I don't even know how that works. They just send me like an emailed receipt every single time. So I don't need any of that fancy stuff. And I'm doing like 300K plus a year on eBay, Amazon, all those combined. So again, do what works for you, but I'm also trying to save you money, and CPA will help you do that with all your stuff as well. So I'm not seeing any other questions. So really appreciate everyone for joining in. Hopefully this was helpful to you guys. And I will post this on YouTube. So thank you guys for watching.